Last week, I got paid without working, and again, paid again. Now, I'm sure you're wondering, is it so? So, let me tell you this, it is none of them. The payments that I got paid last week and I'm expecting this again this week is my dividends. If you've ever wondered how people earn money from stocks consistently, then this video is for you. And I'm going to make it as beginner friendly as possible. So, first of all, I will be sharing my personal story. I have been receiving dividends every year from stocks like banks. I have in fast moving consumer goods, I have in oil and gas, I have in different industries, but I'll use the dividends from the banks as an example. Now, the interesting part is I didn't start with a lot of money. In fact, I was very skeptical when I started. I have a very low risk appetite. I hate to lose money. I mean, I've lost loads of money in the past from wrong businesses and wrong investments. So I wasn't ready to put myself in a position where I'm going to lose more money. But of course, you know how it is. You have to take a risk at some point in time. And I decided to start my risk, first of all, with investing in banks. And the interesting part is, like I said, I didn't start with a lot of money. I simply understood one thing. Some investments don't just grow, they pay you, right? So the idea of the whole thing is I get paid without doing too much work. It means other people are doing the work for me while I get being paid. Now, I'm sure you may be wondering, especially if you're new to investment, wondering what exactly are dividends. So I'm going to simplify it for you. A dividend is when a company shares part of its profit with you because you own a part of the company. No matter how small it is you use to invest, you own a part of the company. Now, you may own a very teeny, tiny part of the company or a large amount depending on how much you invest. So, the more you invest, the more shares you have, and the more of a shareholder you become, right? And of course, the more dividends you would be expecting when it's time to get paid. You technically become a part owner of the organization or the company. And when they make money, you get paid. But note, when they make losses, you don't get paid anything. So, which is why you have to be careful in the kind of companies that put your investment in. Now, why bank stocks pay consistently is because certain industries, especially banking, tend to pay dividends more consistently. And of course, speaking from experience and speaking from the fact that I also worked in financial institution for almost 2 decades, I know this for a fact. And this is still what happens consistently and will still keep happening. Why? Because they have stable business models, because they have strong cash flows, they have long-term profitability. They really do a lot of extensive planning and strategic thinking in how they can stay profitable. Of course, they also have, the banking regulations that guides them and of course monitors what they do so that you as a customer or a shareholder doesn't lose your money. And that's why many long-term investors include investing in banks in their portfolio. And that's why you, as a beginner, should also include banks in your investment portfolio, just like I did, especially if you have a very low appetite for losing your hard earned money. Now, I have a very clear that I'd like to. There's still something you decide. So let me join this claim, not guaranteed. Like I said earlier, you need to be sure. I decided to choose banking for a lot of reasons, which I've earlier stated. Now, companies can reduce or stop paying. So they can reduce the amount of interest you're going to get from the dividends, or they can even decide to entirely stop paying dividends, which of course technically is a loss for you as well as a loss for them and any other shareholder. So don't just say you want to invest and build your portfolio and then run and start investing blindly. Always look at certain things I'm going to mention now. You have to look at the company's past performance. If you can go as far back as 10 years, if that is possible, depending on how old the organization is, you must look at past performance. Don't leave it to somebody to make the decision for you. Don't leave it to my friend is investing, my family is investing, and they're all giving good feedback, and that's why you invest. You have to make sure you do your own research, all right? So if you're going to invest based on other people's opinions, then just be ready not to blame them if anything goes wrong because you made that decision. Now, you also should look at the history of payments in the past, right? The past is always very important because in most times the patterns always help you to know in a very predictable way what the future will look like. So if they have a history of not paying dividends or paying poor dividends or always having losses, then it goes without saying that that may likely be the future of that organization. So that's a red flag for you not to ever invest in them at all. And then again, look at long-term stability. So once again, this is why I personally always gravitate to banks. And I'm not saying here that you should invest only in banks. I'm just giving you my own personal reason why I have gravitated more towards bank. Like I said, low risk appetite. But there are many other industries like fast moving consumer goods, oil and gas, and the likes that you can also invest in. There's so many logistics, so many. There's just a whole load of companies you can actually invest in and get good returns and get paid dividends yearly. So if you are just starting, you have to learn how the stock market works in your country. So don't use how the stock market works in an African country to determine how it will work in a foreign country, maybe in Europe, in the UK, in America, or any other part of the world. You need to localize your investigation to your own country. Another thing you need to know about when you're starting is to start small. Don't join the crew of go big or go home. If you go big, you go home, you crash big. So you need to start small. And then when you get used to it and you gather enough courage, you can then invest more. Focus on consistency, not quick gains, especially for people who are starting and don't have so much of financial discipline. So your focus should be on consistency. So when you gain that level of consistency, and you now know how to do proper research. Of course, there are times we make mistake, even with so much research. Anything can happen. The economy, the climate, so many things. Government regulations can affect that company or a scandal. There's so many factors, but at least based on what you know, you should be able to determine to an extent how well your investment will do. So focus on consistency and start small, not quick gains. Because most times when people focus on quick gains, they fall into scams and big trouble and lose a lot of money. Now, when you find out that the company is paying you consistently on dividends, what I always personally advise is to reinvest your dividend. So let's say you invest a certain amount and then you find out that they're always paying you consistently without fail. That amount that you are being paid, reinvest back into that organization. It's not compulsory, but it is just um, a personal observation, or should I say, financial advice. And this is exactly how wealth compounds over time. So instead of getting the dividends and then squandering it on things that don't make any sense, I mean, if you have other plans or what to use the dividends for, that will sort of like sort you out long term, and of course, maybe help you to sort out one or two financial constraints, that's fine. But if you can reinvest in that organization any dividend you get, because this is a very simple and basic way how to build your wealth over time. So I'll leave you with this. Salary pays your bills, but investments pay your future. So you can imagine me just sitting on my own, minding my business, and I'm seeing a credit alert on my account. And then when I called my stockbrokers, they informed me that another bank, I'm not going to mention the name of the bank, is going to pay me dividends again this week. So I mean, it makes a lot of sense. If you get paid regularly investments, trust me, there's so many things you can use those monies to do and sort out for your life. So dividends may look small at first, but over time they grow. That is just how compounding wealth works. They grow. And the more you invest, the more your dividends will come. So the real question here is, are you positioning yourself to get paid even when you are not working? Because trust me, if we're all going to rely on salaries, I'm sure many of us will not even have anything. Let's look at the economy. Sometimes our take home pay cannot even take us home anymore. So if you want to know more or you need personal advice or guidance on what to invest in or how to invest or how to start to invest, please comment dividends in the comment section if you want to learn what to do and how to do. All right. So the disclaimer here is this video is just basically for educational purposes only and not, this is me just sharing my own personal experience and what has worked for me. All right. So I'll be seeing you in the next video.